think we're gonna get started here. So welcome everybody to the webcast, which is titled Confidence for Uncertain Times. And I just wanna thank everybody for coming. I know that these are strange times and can be stressful times and can be very anxiety producing. So our aim here is to really just support you, and hopefully today you'll have a little bit more information as well as be encouraged. So we are here for you, we're praying for you, and we're hopeful that this is encouraging. So why don't we just start off with the objective of today. So what we're trying to accomplish is to really offer wisdom as well as clarity and confidence to investors and small businesses during these uncertain markets. So that's really what we're hoping to accomplish for you as you get off the call today. So I'm just going to go through a little bit of an agenda, some of the housekeeping items and things that we're going to try to accomplish. So just from a housekeeping perspective, just know that everybody is placed on mute. Please use the chat to ask any questions, should be on your screen there. And this is a forum by business owners like yourself. There's probably bankers on there and such. And so just try to connect very different experiences in these changing times. So that's what we're here to do. Obviously, we're not medical experts, nor have any insights into the changing landscape. So just a little insight on that. Our goal is to have you guys done and off here by 11:30. So we will work expediently to make sure that happens. And so just from the agenda perspective, we're going to take a couple of minutes just to make some introductions to the participants who've been so gracious to give us their time and their talents. I'm going to spend just a minute or so talking about the overarching tactical strategy for success for you as well as any clients that you're working with. And then we'll go through each slide, which is, we're going to talk about business operations by Jeremy Veach, talent by Nick Morrison, capital, that'll be my section, legal by Chris Charles, and then cash flow management by Jerry Foster. And then at the end, we'll try to carve out some time for Q&A. So if you have any questions that you want us to address, I'm sure there'll be some ones that might fall into line, so we'll try to consolidate those. But I would just go ahead and type those into the chat for Jeremy, or you can email Jeremy at jveach@ironwoodventure.com. Again, that's j@ironwoodventure.com, and it's here in the slide. We'll have that at the end as well for you. So I'm just going to spend a few minutes talking about the participants here. The first one is Chris Charles. Chris Charles is the managing partner of Provident Law, State Bar real estate specialist, husband and a father of 3 boys. Jerry Foster is in the business advisory firm focused on identifying problems, on implementing innovative long-term solutions for middle market companies facing challenging times. Myself, owner and founder of Integrity Capital, LLC. We focus on providing proactive capital solutions on the commercial lending side for investors, developers, and small business owners. Nick Morrison is the founder and leader of Potere, a company that focuses on increasing employee engagement through purposeful hiring and people operations strategies and technologies, allowing companies to have the greatest amount of stability, profitability, and the quickest run to accomplish their mission. And then finally, Jeremy Veach owns a management consulting company to remove the angst of running a business by instilling Fortune 100 companies. So Thank you, gentlemen, for joining us today. So the first piece that I want to hit on is what we call the tactical strategy for success. So this really is a model for success in these times, we believe. And there's 3 different movements or steps to this process. And we really call this the tactical strategy for success. So it really looks like this. It's wisdom, plan, do. So the first one we talk about is wisdom, or we say gather. So really this is gathering centers of influence and relevant information to tackle the problem and the present challenge that you're dealing with. Obviously, that's part of what we're trying to help with today. So wisdom is that first step, gathering that information. The second one is to plan. We call that get together, getting an appropriate team for your respective business or project to brainstorm tactical actions and steps for a plan. And then finally, the third one is just to do. We say this is called go. So go take immediate action with relevant information that you have of that plan, and then go back and assess any results. So you can just take that as the overarching tactical wisdom strategy that we're trying to implement today. So with that in mind, we're going to start off with Jeremy Veach, who's going to spend some time giving us a layout of the business operations. So Jeremy, thank you for coming today.
Hey, thanks so much, Dave. I love doing stuff with Dave Cotter. If you don't know him, he's so calming. Dave, your voice and your pace, it's always just no matter what. Like it could be a stressful environment or relaxed, and you're just always nice and pace. And I love it. I love it. So thanks, Dave, especially in a time like this where it really is uncertain. We're getting new news in Arizona, new news across the nation, as it comes in. And so it's just really, really fluid. Really one of the top questions that we hear on CEOs' minds is, how am I operating in all of these changes? And so some of the guidance that we're giving, I'm going to focus on today, a portion of that, but a lot of it stems around these 2 pieces, is providing clarity where we can and being proactive. And so as a CEO, as a leader, this really is not a time to be silent. And so we want to have a tactical plan and provide employees, our customers, and our clients clarity, especially for our employees, clarity on those priorities. And I'm glad Nick's here, because Nick is an expert on HR, employee things. And so he's going to speak more about that. But what I'm going to give you today, just in a couple of minutes, is some tangible examples. Number 1, I'd love it to be an encouragement that you can see that progress is being made in this environment. And number 2, I hope that you hear some of these case studies, some of these stories that we're seeing over the last few weeks, and that you see bits and pieces of action items that you can actually take today as well. And so the first one is to stay engaged with customers and clients. The second is to view revenue with new eyes. And the third is, hey, there's going to be some downtime. So what can we do about it? So let's dive in. And so the first piece about staying engaged with customers and clients, really we want to stay engaged with their changing situation. So my partner, Patrick, he is great in this scenario. He's like a wartime general. So 3 weeks ago, he came in the office. He had a risk matrix with all of our clients, all of their clients. He had it all laid out. He was super proactive. And so what that took shape for us was kind of this crisis battle plan matrix. And we've gone through with each of our clients to walk through that with them to help them make that. And so what I've seen is that we should be taking and looking at our clients' potential impact, and then our clients' customers or our clients' impact. And that really then leads us into the next piece, is it gives us a true assessment of what our revenue streams are going to look like. And this can be really scary to do, but it is really helpful, and you should actually start writing some of these down, where those impacts are going to be. Number 1, what revenue streams are going to be impacted. There may be increases, likely there's going to be decreases, but we're honestly seeing across the board. We've got some folks that are ramping up. We've got some folks that unfortunately have to pause their business right now because of the external environment situations. But one case study, we had a client email us earlier this week, and their number 1 payer, which is a big business, has 75% of their revenue in this one channel, said, hey, we're gonna shut down for 6 weeks. Well, that's huge. And he was really afraid. We took a look at what that impact would be. We forecasted it. I usually do a short forecast, but I learned from Jerry Foster this week that I should be doing a 13-week and beyond forecast. And so we did that with him. We saw, hey, we can actually manage this. Let's reduce some of our costs here. And so we did that look forward, and that was huge. The second piece with revenue with new eyes is, what are my new revenue options? So we have a client that is in the wholesale coffee business, and he's having a hard time because most of his clients are closing their doors right now. And so he actually pivoted, and over the last week or so has really been driving online sales, and he's seen significant growth in online sales. And so he's doubling down on that, and he's super excited. I actually talked to him yesterday, and he says, man, it feels like when I started my business again. I'm out there guns blazing, and I'm doing the best I can, and I'm coming up with new ideas. And he really felt energized, and that was encouraging. We're also seeing a shift to digital. And so this is something that a lot of businesses can do, and you probably have to be pretty creative, but it can be done. We have a client up in Canada that's a neurological rehabilitation clinic for kids with strokes, and hard to have those kids in physically to work with them right now. And so she had been toying with the idea of doing telemedicine, and boom, overnight, now has shifted to telemedicine. So changed the landing pages, changed the marketing and the social messaging to really be able to focus on that. And she's really excited about it. And so those are a couple of few great examples. Now, at the end of the day, you may have some downtime. Some folks, we have folks in the family entertainment space that literally have to have their doors shut. They're places where kids normally come in and collect, and there's hundreds of kids running around. And so what they're doing is they're focusing on doing internal upgrades. They're actually cleaning, they're doing all their maintenance on their equipment right now. And they're sharing that with their customers. And we have an event client that there's not a ton of events going on right now. Weddings are getting, just delayed and pushed back, and they're happy that they can do that for folks. But what they're doing is they're streamlining some of their back-end systems for client handoffs, and or go from sales to operation handoffs. And so you can have that opportunity to upgrade some of your internal processes as well. Got a few other tips before I pass it over. Dave, if you go to the next slide, what we're seeing is I wanted to share what we're seeing from last week people are doing. And I want to share also what we're seeing a lot of businesses focusing on this week. And so last week, we really saw businesses focusing on messaging to customers and clients. In that, they were providing clarity on business status. And then they were really taking a look at what business activities are mission critical in the near term. So get away from people, get away from a job, but you want to focus on job functions, not on the person. So what are those critical business activities? This week, then, we're seeing people put a lot of business continuity plans in place. They're also making employee plans. And again, Nick's going to touch more on that here in just a moment. And then they're taking a look at what internal processes can I fix and upgrade. So as you look at this list, take stock of what you've done so far, and I strongly recommend working through each of these items. And so as we shift this week, it's kind of an internal week. We're focused on ourselves. What am I going to do? How am I taking care of my employees? What I would encourage you for next week and beyond is to think outward, to think about others, and to think about our healthcare workers and how you can take your business, your special skill set that you have, your resources that might be more available today, and how can you pitch in the greater cause to keep things going. And so I just put that one thought in your mind right now. One thing I know is in all CEOs' minds are their employees. We started businesses to help people. We have those people working for us that we really care about. So Nick, will you touch on some of the employee pieces that you're seeing and hearing out in the environment?
Thank you, Jeremy. Appreciate that. And without a doubt, every workplace in the country and probably the world is being affected today. That's going on. So things are changing. And with this sort of time of uncertainty, you want to make sure that you're showcasing care and there's continuous connection with your employees. The reason why workplaces are changing today and the differences that we're making is for the personal health and well-being of people. And that includes the employees first and foremost that are coming through your door. So communicating that is a really big thing. And then also doing what you can to maintain the connection. So you may be used to seeing your employees face-to-face 8 hours a day, 5 days a week. That's not necessarily the case today, but you still want them to be engaged with your workplace as much as possible. So if you own a chain of health club centers and you're having to shut down today in order to protect the health and well-being of people, communicate that, and then also make sure you're touching base once a week with those employees also, because when you open back up, you want to have a great operation, continue to move forward. And so the guidance is changing very quickly, and so you want to make sure that you're maintaining a very close relationship and close contact with whoever your head of HR is, whether they be insourced or somebody that you've outsourced trust to do that. They're really going to provide your point person, so they're collecting wisdom and best practices out there, bringing those together. The two of you will brainstorm and then go out and execute on the plan. And also there's two greatest resources that you want to keep in touch with externally, and that's OSHA and the Department of Labor. And so they've got hotlines as well as special web pages that are set up to address these times, and they're consistently changing. So what I recommend doing is calling when you can. So yourself or whoever your head of HR is can call these two hotlines, explain the scenario that you're going through, and they'll give you direct guidance on what you can then do with your employees and staff members. And you want to make sure that you're reporting anything correctly to them also. If you're having to do temporary layoffs or having your workforce outside of the workplace temporarily, make sure that you're reporting that correctly to the Department of Labor, because there is a ton of relief that's happening right now for both employees and employers. And as long as it's reported correctly, you're going to get that relief quickly and you're going to get it back. So that's why also you want to make sure you're maintaining a close connection with who your employment law attorney is, so that you're tapping into those resources correctly. You know, there's a large recognition today that employers and the workplaces are being impacted, and so there's help that's being given out, and it's changing quite a bit. The first one, the first big measure that came out is this Families First Coronavirus Response Act, and the two big pieces of that you want to take a look at are the extension and the broadening of FMLA, and then also emergency paid sick time off. So the broadening of FMLA typically looks something like this: that you've got your child is no longer allowed or able to go to school because school is closed down and you need to take care of them. So they are at home. You do have to allow them to be at home taking care of the child instead of the standard 14 days that they have to wait in order to get paid after that. It's 10 days. So they're shortening that period of time, and then also sick leave that's in there as well. And so we're extending that, broadening out, being very loose with who's able to do that. So you want to make sure that you're in communication with your employees as well and what they're dealing with, right, in their personal lives and externally, and handling that appropriately. And then you'll see a lot of extra relief that comes out also. And Dave will talk a little bit later about the resources that you can ensure that you're getting to have the most amount for your employees. But that's what you really want to have. You want to have the most amount of resources for your employees correctly, and then you're communicating with them that there are things available and you are helping them out. So for example, within the health club chain, if you're sending people home, not allowing them to be there, there is assistance for them both through unemployment as well as some stipends through your company. If you work in a software company, for example, and you're able to continue to work and you're sending your remote workforce home, the big distinction you want to look out for there is, did you send them home, mandate them to be home, or did you simply give them the opportunity in order to be home and then they took it? There's big distinctions with there. So one way or the other, if somebody is working from home, you need to make sure that they've got the proper tools, technology tools, in order to get their job done, and then they're also reporting their hours correctly. So if people are working from home, they still get lunch breaks and proper breaks, so make sure you're doing that. And then also, the same hour limits, work into that, which is a really big issue. So make sure you're watching out for those. And really the big thing is to communicate consistently with confidence and support. Your business is going to come out of this the other end, and you're going to do well. And so continuing that there's confidence and support with your employees and your staff members, and the engagement level is there. So that way, when you come out the other side, you're with the best team possible, and you got the best connection possible, and then you're going to go hit growth. Quite frankly, in this time period, you will forever be evaluated on how you as a leader operated during this time. So whether you're interviewing for a new executive role and you have to stand in front of the board, they're going to ask you, how did you operate during this time? What did you do? And then also forever, when employees are coming to you and interviewing, choosing and how to join your team and evaluating them, they'll forever going to ask you, how did you operate with your employees during this time? What are you doing with them? How are you running as a company? So my suggestion to you is have something good to report, have something proud to report out, which includes again, getting all of the resources possible for your employees and for your company, and there is a lot of relief that's out there. So I'll pass it over to Dave, and he'll talk a little bit more about some of those resources that you can have in order to best take care of your employees, your staff members, and your company for today and into the future.
Thanks, Nick. That was really helpful just on having that care and connection. I know that'll matter for the long term. So there's a lot of volatility right now, day to day, in the lending markets, as you can imagine, and I know you're experiencing. So my hope is to provide some ways just to be, again, proactive and flexible. Those are the two things I want you to be able to walk away with today is proactiveness and flexibility when dealing with your lenders. So there'll be several different areas. The first one I want to really touch on is the actual commercial markets. What's going on? What's the temperature and the gauge of what's going on in each one of the different segments that we'll go through. And then I'll try to land the plane on just what are some of those proactive things, proactive plan that you can do to minimize risk or mitigate some risk, and just a place to say, what do I do next? What's that action step? So the first one is the CMBS market. So commercial mortgage-backed securities is what that stands for. And what you're seeing right now is overall due to what they call MAC, which is material adverse change, or / volatility, which is really taking place right now. They're really hitting the pause button. So these larger lenders that are doing income producing loans that are tied to the bond market, tied to the stock market, are really coming to a pause right now just due to the lack of liquidity. So for example, there's really no active buyers of bonds right now. The spreads are widening, 50 to 80 basis points, sometimes even higher depending on their rating. And so lenders who really have financed those with the idea to securitize those and sell those off of their balance sheet really are not able to do so. And so there's a lack of liquidity, therefore they've just stopped and said we're not going to be lending anymore. Or you're starting to see some major retrading of the pricing as well. So that's the implication there, is the widening of spreads, therefore you might get retraded. So if you're the borrower, you might see the interest rate go quite a bit higher right now, and then the timetables as well are stretching out. So if all of a sudden there's some retrading or some change, you're going to see your time frames stretch out, which Chris Charles is going to touch on a little bit later, which will be real helpful. You're going to see sort of a loss of due diligence monies that might take place. So some of those, trickle down effects might take place as well. Tied to that is life insurance companies that are lenders. You think of, Allstate and some of these larger lenders that are in the life insurance side. What you're seeing here is corporate bonds, again, going back to the bond market, again, because those are widening quite a bit, and so the rates are higher, is you're seeing that become more attractive to life companies as an opportunity cost for them. And so where you're seeing most people think, gosh, the interest rates are coming down from their perspective because the CMBS is shutting down and moving to life insurance companies, they're saying we have a lot of opportunity, plus we could also go out and get bonds that are higher. Just to give you an example, March 6th, the AAA bonds were 2.36. March 18th, they were 3.92. So you can see that huge margin and spread. And so they're going back to borrowers and saying, hey, the interest rates are going to go higher right now. Therefore, the payments obviously on those are going to get higher. There's tighter underwriting. Therefore, you're going to see some lower loan proceeds take place. Again, longer closings predominantly because what's happening with all the shutdowns, with the coronavirus, most groups aren't getting on planes. Third-party appraisers are not able to go in and do inspections right now. So it's just slowing down the process. Title companies can't process stuff. So again, you're just going to see, as we'll discuss a little bit later with Jerry as well, those things are going to widen out and stretch the timeframes. Bank lenders. To give you an example, most bank lenders, in the whole country right now are feeling the pressure from small businesses, shutting down shop, having to let employees go. They can't really operate the same way that they did in the past. So there's a lot of knocks on the door saying we need some relief. So you're going to see activity shrink down, opportunity shrink down as well. And so there'll be a lot of loss of lending options and also some cost cutting, employee cutting and such. And so a lot of groups are scrambling for relief that we'll talk about here in a minute as well. Bank lenders in the total package of outstanding loans is about 3.5 trillion. Banks hold about 40%, 1.4 trillion right now. So you can imagine that's a pressure point for the government. Right in glove with that is SBA lenders. I think this is an area that we'll see some positive things take place because the stimulus package is going to be geared towards banks as well as SBA groups. The lenders are going to have a lot of things to help soften the blow. You're seeing right now SBA disaster relief that's available for short-term cash flow. We'll be providing some of those resources available to you if you'd like as well. How do you apply? How do you get access to those monies in a short period of time to help with 3 to 6 months of cash flow with very, very low interest rates as well. They're offering higher guarantees for lenders. They're waiving SBA fees. They're providing deferral options right now. So those things are readily available at the discretion of borrowers at the present time. In the bridge lending market, which is really just dealing with properties that need turnaround, they might be vacant, that market is going to shrink up substantially because, again, they're tied to the CLO market. They're going to probably be on the sidelines and much more cautious on looking at opportunities right now. So again, the idea is you're going to have to move to other options. That's the implication. There's going to be longer close times and just even seeing escrows that will drop as well. And then finally, just agency financing. This is Fannie, Freddie, apartment complex financing. This has just absolutely exploded. Just to give you an idea, the system is taxed right now, meaning that the rates have dropped so much that there's this huge influx of people looking to refinance and purchase apartment complexes right now. Just to give you an idea, 25 billion came into Freddie Mac in the last 3 weeks. And what they're used to is about $8 to $9 billion over about a month's time. So as you can imagine, tons of supply coming in, tons of demand for this. And so as much as people want the interest rate to go down, it's actually going up. So we're seeing a lot of retrading taking place, higher interest rates, longer time frames again to close, and lowering loan proceeds. So what do we do? What's the proactive plan for us at this present time? It's really what I talk about as pushing out and speeding up. And so what we want to do tactically is to ask for extensions, try to press things out. Don't hold back from that right now. Be proactive as well as flexible with the sellers. Have backup plans available to you. Have a plan B and even a plan C, another lender that's available to you. Look for resources. And on the push out, just ask for help. Ask even the lender for help. Ask other people for help. Don't be shy about that. Just ask people for help. And then finally, speed up. We're seeing a lot of people trying to negotiate right now, lower interest rates, different time frames. My advice to most clients is stop negotiating, hurry up, get information in, be diligent about getting those things because time kills deals. Cut the non-essential expenses as you have to right now. Be expedient. That's one of the things I learned in the downturn. Be expedient to do things, wise but expedient. And then start communicating quickly. I think we're going to hear that thematically through here. Don't hold back. just be quick. And so just remember to push out, speed up. Hopefully this will help you better navigate the capital markets. And part of your planning should include a review of some of the legal elements. And I'm thankful that we have Chris Charles to help provide some insights of how to structure your deal. So without further ado, here is Chris.
Hi, everyone. Yes, I'm going to speak for the next 5 minutes or so, addressing some of the unique legal issues that we're seeing with the current landscape. I'm going to first, and I'm going to gear my comments primarily towards real property issues for property owners, landlords, commercial tenants. I want to speak first about pending transactions, because that's on a lot of people's minds right now. A lot of calls that I'm receiving from clients concern questions on how to address, how to deal with pending deals that are under contract right now for real estate matters, for commercial leases, acquisitions, what options are there. And as Dave mentioned, right now, flexibility is key. Looking for extensions, opportunities to delay, extend the closing while the parties work through some of these first impression issues. That's really critical. And be proactive, as Dave mentioned. Don't wait, but now is the time to reach out to the other party, whatever side you're on, the buyer or seller, and address the unusual situation and look for opportunities to extend the deal, to give each other time to make it work, or to make modifications, revisions, amendments. Force majeure, I'm going to talk about for a moment. Not something that comes up super often. Probably the most common example of this was 9/11, the impact that had. But force majeure is just French for superior force. Most real estate contracts, business deals, have some form of a force majeure clause in the agreement. At least well thought out contracts do, to contemplate situations like we're dealing with right now. Superior force is at play, preventing one or both parties from performing their obligations under the contract. I had a conference call yesterday with a group of attorneys around the country, and one of the attorneys was in DC, and the question was asked, what is the temperature like in Washington, DC right now? What is your sense? What's happening? Does the government have a control over this? And the attorney's response was, it's quite sobering. He says, being that close to Congress, federal government, he said there's just this overwhelming sense that this is beyond the government's control. The viruses are beyond the government's control. So, great example of applicability of a force majeure clause. So that is going to be a term that's going to be thrown around a lot in the coming days, and an opportunity to extend dates, hopefully, and in most cases, just to provide for extensions, renegotiations, and in some cases even terminate the agreement. If there's contracts at issue right now without an express acts of God or force majeure clause, there are common law principles that may apply. Every contract, whether it's in the contract or not, is subject to common law doctrine of impracticability, or frustration of purpose, impracticability or frustration of purpose that may give the parties opportunities to kind of renegotiate the events that are taking place. Next, I want to talk, so pending transaction flexibility, and there may be some opportunities there built into the contract or otherwise. I want to talk for a couple minutes also about commercial leases. I've received plenty of calls already this week, talked to clients about what to do with both landlords and commercial tenants, the present and coming situation, and how to deal with lease issues. Now is the time for commercial tenants to approach their landlord about possible concessions, assessing, there as the other speakers have mentioned, kind of predicting cash flow for the foreseeable future and what impact that's going to have, what cash flow availability will be there, and what type of needs the tenant may have. So now is the time to approach the landlord to look for whatever concessions they might need, rent abatement, rent reduction, whatever they can to make it work. Some of my property owner landlords have told me the advice to pass on to commercial tenants is to approach the landlord from a posture of humility. What can you do to help me? How can we shoulder this pain together, and not to come to them and demand that they do X, Y, and Z. So just kind of practical pointer there. You might get more bees with honey, I guess you would say. But I think the kind of another way of saying this is look to shoulder one another's burdens during this time. The opportunity for negotiation, may depend on what the contract says. Because the contract does have some type of force majeure clause or act of God clause, something like that. There may be an express provision that allows some type of renegotiation during this period. Just worth mentioning, it's not directly commercially related, but you probably saw this week that Ben Carson and the HUD did implement a 60-day suspension on all foreclosures and evictions. I'm not sure how that's going to play out with commercial issues, but one of the things that certainly was super common during the last downturn was commercial lockouts. So to the extent that is an option under your lease agreement, that's to be approached delicately. I'll just put it that way, and probably wise to seek out counsel if that's an issue as a tenant or landlord. Last thing I'll just mention is about future transactions, as Dave mentioned. Really important to build in flexibility with the contracts, contingencies. There's going to be increasing need for really good due diligence in the coming days. So definitely want to have really well thought out agreements with proper contingencies, financing issues, appraisal issues. Who knows how long deals are going to take in the coming days. So look for opportunities to build that into the agreements and provide the flexibility that will be appropriate. And then the last thing I do want to just mention is business interruption insurance as it applies to real property. Most commercial property insurance policies will have a business interruption insurance provision that provides. So most commercial property insurance policies will provide coverage not just for property damage, but also for any lost profits resulting from government action, force majeure issues, business closures, some type of edicts shutting down business. So I think that's going to apply right now. Several major states even are shutting down state ordering the closure of businesses. So I think that's going to be applicable. So look out for business interruption opportunities to provide some type of benefit here in these situations. But notably, the business interruption insurance clauses typically will not kick in, will not be triggered unless there's also property damage. So that's going to be an interesting legal issue in the coming days and factual issue. Does the coronavirus in a building constitute property damage? We do have an instructive federal case that is analogous to this situation in Gregory Packing versus Travelers Property Casualty Company of America. Federal court in that case ruled that the property damage had occurred, so the property business interruption insurance clause did apply. Property damage had occurred when ammonia was accidentally released into the commercial property. So therefore rendering the building unsafe until it can be air cleaned out. So if we have cases where one or more people have tested positive for coronavirus in the buildings, is that property damage going through the airways, the vents? So something to keep in mind. Thank you. Next, I'm going to turn it over to Jerry Foster, who's going to update us on cash flow management and lending issues during this crisis. Thank you, Jerry.
Thank you, Chris. You know, let me just say my heart and thoughts go out to those that are affected by this virus, all the impacting cascading issues that come from it, whether it's direct or indirect. So let me be clear and ultimately extend a heartfelt and sincere, you know, appreciation and empathy for things that are going on. As it relates to what I do professionally, Resolute is a company that's built to respond to distress situations. And so uniquely, I sit on this call as a person who's probably seen the most of this. My comments today are meant to help companies that are struggling with the issues that might fall before them, with the idea that the common denominator associated when we get involved with companies that are in trouble are they don't really know where to go with a starting plan and what is it that we need to, where do we start and how do we get to here. So my thoughts really surround the idea of cash flow. And obviously cash flow is critical to the operation of a company. It's literally the blood that pumps through the veins. Without it, the heart doesn't move. I mean, it's fundamental to the operation of a company. And so with that, my comments really are surrounding those ideas. And we believe it's the first place that if we were to come into a company, it's what we would attack. So let me dive into some thoughts for you to consider. The first place we would look is really to kind of go to your payables, understand exactly what monies are owed, who they're owed to, and ultimately determine a plan associated with how you would identify the vendors that are critical to the operation and the services that you're providing, and then identify everybody else and figure out how you can communicate an idea of what we list as share the pain. The idea here is that everybody is in the same situation. It's by no means isolated. If anything, it's global. And therefore, you know, everybody's aware of what's going on. The hope is that you would find a common denominator related to the ability to work through these things together. What we're advising people, and in the event that I would be asked as my team to do this, is you ask, and even if you're told no, you keep asking again. You know, situations, circumstances are unfolding by the day. If it's a landlord, for instance, they may be getting mortgage relief. So therefore they can extend to you some type of lease relief. So there's scenarios that are unfolding. So if you hear no, keep asking. Again, share the pain. The next point I have listed is defer and extend. We work with lenders every single day. What I should tell you as it relates to working with them is that they ultimately want to know what's going on with your business. They have no interest in owning your business. They are not operated that way. They are not set up to do that. They ultimately want to see you in the position that you are running your business. So the part of this that comes into it is the establishment of trust. It's the ability to kind of communicate with them what your true and honest issues are. Don't be shy, especially in this moment in time, because we're being told by the lenders that we know and trust that essentially there are different tools in their toolbox to be able to offer to companies that have the deepest need. Some of the things that you might proactively ask your lenders to do are waive covenants for Q2, Q3. Don't do anything related to what a typical year-end scenario would look like if you have that. If you aren't aware of what a covenant is, please go back and review your loan documents. Those are subjective requirements that a lender can put upon you to be able to help you stay in compliance with their ideas. So please go back and review those covenants and then have a conversation with your lender about potentially allowing there to be some flexibility with some of those covenants in the short term, again, Q2, Q3, and or some scenario under which you can explore creative ways to work around them. Chris did a great job of addressing a lease scenario that is most times never considered. Again, it's the force majeure section of your lease. Everybody who negotiates a lease probably glances right over this, myself included. Very often, or very inoften, is it ever, kind of requiring us to take focus on it. You may find, and majority will find, that essentially these things are written for the benefit of the landlord, but these are unusual times, and it's someplace that you should educate yourself and understand what's there. We had a circumstance 2 times this week where we've been able to find really great conversations with landlords, and then those landlords were very flexible in working with our clients to allow them to have some type of rent holiday. One example we used is where we tacked those months on the back end of the lease. Another example we used is that this company could offer to pay the CAM load, so the expenses for the operation of the building they could basically pay, but they ultimately asked for the lease payment itself to be creatively tacked on to the end of a lease, or a balloon payment of something. The last 2 comments really address fundamentally the way we look at a distressed company. Jeremy was kind enough to kind of allude to the fact that based on conversations he and I have had, it's something that maybe isn't completely fundamental to how most people approach their business. In the world of GAAP accounting, everything's based on accrual. In the world of distressed environments, everything's based on cash. And in that conversation of cash, I would challenge you to look at something that is the way under which lenders speak, and that is through the development of what's called a 13-week cash flow. It essentially is the ability to understand your cash position as a result of both revenue and expense for this current week that you find yourself in, looking forward to the next quarter, recognizing fully that everything is unfolding and changing daily. But I think this is a healthy exercise for anyone that's potentially suggesting that may have issues in their business. And it'll force you to understand what your collections look like. It'll force you to understand how to forecast your revenues. And it'll immediately show you the impact or the benefit that can come as a result of making some changes to your expense structure, and understanding how that rolls through from a cash position. I would also, and we have started to encourage our clients to look at a 26-week model. And now, granted, I fully understand nobody knows how to even look out for the next quarter, but the benefit here is that you are articulating and putting in writing a plan that you potentially can offer to your lender, which is a common language they're used to understanding as it relates to a 13-week and then again a 26-week model. So those are the thoughts that I have to share with you. I will tell you that, please consider the opportunity to reach out to myself or others on this call. I'm really honored to be a part of this, partly because, as you can imagine, our skills are unique and happily able to be extended in this environment. But thank you, Dave, and others for including me here. And with that, I'll return it back to you, Dave.
So thanks, Jerry, for that. That was fantastic, and everybody provided a tremendous amount of value and help and wisdom and insight. That's really our objective here today. So again, thank you so much for everybody. We're going to spend a few minutes. I think we had a few questions, Q&A right now. So again, if you have a question, again, go to the chat as well as the email, and we're going to go ahead and try to divvy up some of those questions. We'll do our best to get you off, but if you need to hop off right at 11:30, we understand.
Yep. One of the first ones that we've gotten just kind of over time, and it is pretty relevant based on some of the announcements. What should I do about my 2019 taxes? Does having that complete impact anything that we've talked about today or looking forward? Jerry, what are your thoughts? You probably got a better line of sight than most on that.
Yeah, so I've been talking to a lot of chief credit officers over the last 10 days or so, and what I'm hearing is, again, some of these things that are unfolding at a national level are just starting to trickle into them and how they're going to process it. But at the end of the day, the thing that I would encourage you to do is try to get your 2019 both business and personal returns on file as quickly as possible. That'll essentially elevate you to the top of the list. It'll ultimately take out any kind of speed bump related to due diligence or underwriting, and it will allow you to kind of be available to take advantage of anything that is in a lender's toolbox today. Typically, tax returns on extension are a little bit more challenging for them. So if it's within your power to be able to focus over a weekend or a short period of time to get those taxes filed, it's in your best interest to do so.
Great, thank you. We have a few questions about, working with employees and potentially having to let them go, so we'll kind of bucket them all here under this one question. Nick, you probably be well prepared. Says, I do have several full-time employees. It's difficult to navigate which option would be best for them. Unemployment, paid leave, etc. Is the best approach to just pass information along, make recommendations to them? What's a good way for the CEO to be able to handle that?
Yeah, that's a really great question. Thank you. I think the important distinction here to know is that you may not have very many choices or any choices, but the distinction is that there's a lot of resources that are available for you and a lot of relief that's available. So if an employee calls you in the morning and says, I'm feeling symptoms that seem to be very similar to the coronavirus that's there, they have to stay home and they have to go on immediate paid sick leave. So that's the only option there. If you run a chain, so that's an example. If you run a chain of health clubs, for example, and you can't allow customers in order to physically come into space, your business is essentially shut down. Your employees effectively go on unemployment, and that's really the option for them there. So you may not necessarily have many choices. You just want to make sure to categorize correctly what you're doing with those employees and why, and then also encourage them to get education also on what may be available for them. But it basically looks in kind of two different ways. If your business is shut down because of this and your employees are not able to come to work, then unemployment seems to be, to me, the option, and they're pushing there. If for whatever reason the employees are not able to do their work, whether it be in the workplace or remote due to illness, whether they've gotten a doctor's note or they're just feeling symptoms like that and they're saying those, then they go on to sick leave, or if they're caring for another loved one, then they go on FMLA. So those are kind of your choices there, but there are also government incentives via tax breaks through your payroll tax that pay you back 100% for these emergency times when you're putting people on FMLA or sick time leave. So that's what you want to make sure to do the research on, and that you're getting the tax breaks for those and you're getting relief for those.
Thank you, Nick. Appreciate that. Next one has to do with kind of landlord-tenant relationships. So we'll kind of bucket these together. How can I reassure, if you're a landlord, how can I reassure my commercial and residential tenants without signaling an opportunity for them to take undue advantage of the situation? And then secondarily, if a tenant can't pay rent for, say, a couple of months, what are some ideas of how we can handle that?
Right. I guess the questions are kind of related, go together, but I would encourage open communication with the tenants at this point. And I mean, I don't think that the landlord really needs to proactively offer any concessions, but instead just be willing to listen to the tenant and understand what the situation is, and consider and assess on a case-by-case basis if it's practical, if there's a genuine need, where business is going to be shut down either by state action or otherwise for an extended period. But I think that's the best approach, is just to be available, to listen, and also probably a good time to be looking at your leases and agreements and seeing what terms were already negotiated, and what type of security exists, and things like that.
Great, thank you. Appreciate that. We've got one based on lenders. You believe lenders are going to more likely or be more likely to work with borrowers than last time around, speaking about, the recession back in 08, 09, et cetera. And does the Fed cash infusion have to be used for helping borrowers?
Yeah, it's
Yes,
Any thoughts on that?
go ahead, Dave.
yeah, go ahead. My sense is the answer is yes. They're going to be much more apt to help right now because this is just such a pandemic and it's affecting everywhere from the government down. There's been no indication in any of my discussions that lenders are resistant to have those conversations or standoffish or delaying. I'm just seeing a lot more expediency right now, just given the expediency on the liquidity that's been pumped in and the discussion from the federal government. So I think there's just much more openness right now, realizing how broad this is. So I don't know if you'd agree with that, Jerry, or not, but feel free to chime in.
Yeah, I guess my thoughts to echo that are, this is a different time. This isn't a bank issue as it relates to them having challenges at their core level. This is really an overall demand issue and at the fundamental, business operations side. So the government is backstopping the banks and giving them a lot of tools. They're motivated and incentivized to get those tools out. And so therefore, I believe that the posture is different this time, and they are very much focused on trying to push and move that money into the economy and into the hands of operators and business owners that need assistance.
Thanks, Jerry. Hey, Jerry, while you got the mic there, just a quick follow-up on the IRS. We had a specific question that some of the returns that were expected were pushed forward to pay 2020 taxes. Should we try to get those dollars back? This person feels like they may not owe as much for 2020, but again, assuming there's going to be some tax implication here based on what's happening.
So I'm not a CPA or an accountant that focuses on taxes, but we do have a similar situation where we have a C Corp that essentially did the same thing. And the response we got back was, unfortunately, once the government has received your monies and you've elected to push it forward, it's very difficult for them to kind of reverse course. And so I'm not suggesting it's not impossible, but I would tell you that we made a phone call to the IRS on behalf of a client just recently, and it's the equivalent of trying to call an airline to reschedule your flight. I mean, it is not an easy way to get through to people on a telephone call. And if you could otherwise get by without it, I would encourage you to try to structure your cash plans as if you didn't have it, because I think the red tape and the hurdles you're going to jump through in order to get it are significant.
Great. Thank you, sir. Appreciate that. Hey, we've got just a few more minutes, so we'll try to cruise through some of these questions pretty rapidly because I know they are top of mind. Nick, we had a few other employee questions. How are employers under 50 supposed to pay for the FMLA for their employees? Is it better for the business to let the employee just receive unemployment? I think that tied back potentially to another question prior as well. What are your thoughts?
Yeah, on that, you may not necessarily have a choice on that. So, FMLA really applies to you if you're taking care of a family member who is ill or is maybe not able to go, like a dependent that's not able to go to school. That's what's covered under FMLA. For like business interruption, unemployment is designed for that in order to push people out.